All right, guys, here we are. We are live. It is Thursday, April 2nd, 2026. We got the stock market. We got the heat map pulled up. Let's refresh it. Just look at this. We got ads. We got heat map. We got everything. Let's refresh it. Okay, there's that. Now, we've got the war going on. We've got the Artemis 2 rocket launch. We've got that's about it. Pretty much. The Strait not being open. Gas prices at $1,000,000. Let's go. Let's check out the heat map first, then we'll go through some of the major indices. We've got Nvidia up 0.93% today. AMD is up 3.47% to 217.56. Intel is up 4.89% to $50.35 today. Google is down 0.54% to 295.82. Look at this. Tesla is down 5.42% today to $360.56. Are people catching on? Are they figuring it out? I don't think so. I really don't. Home Depot is down 2.41% today. Let's find something else that's down quite a bit. What's this? Biogen is down 3.5% to $177.34. Netflix is up 3.25%. Palantir is up 1.34% to 148.45. Let's keep moving. Amazon is at 209.77, down 0.38% today. Surprisingly, the energy and minerals are not moving too much today. It's kind of even. Yep. Cool. Very cool. Very nice. All right. Let's keep it moving. Let's go to our watch list of the major indices. Look at my list. We've got the Dow Jones sitting at 46,504.67, down 0.13% today. The S&P 500 is at 6,800. No, it's at 6,582.69, up 0.11% today. The Nasdaq is at 21,879.18. It is up 0.18% today. The Qs are at 584.98. They are up 0.11% today. Gold is at $4,702.70, up 0.49% today. Crude oil is up 0.47% to $112.06. That is probably going to be the story of the day. That is going to be the story of the day. Silver is at $73.17, up 0.34% today. Interesting. Let's look at Nvidia. So, Nvidia right now is at $176.68. Very interesting. I got down lower than that. I got down to, where did I get down to? Got down as low as 165. Did I trade some? Yes, I did. Yes, I did. Guys, do not ever take my this is not financial advice, though. Do not ever do anything that I'm doing. You're gonna end up broke, bro. Don't do it. One of these days, I'll be a rich stock market guy, but right now, I am clawing, trying to get there. You know, so don't do what I do. Let's keep it going, guys. Let's find something interesting. Let's find something interesting. Oh, here we go. Tesla. Alright, so I'm going to try to edit these down and make some smaller videos. Probably try to make 2 of them over the weekend since the numbers won't move too much. It's no secret. So I think we'll do one on Tesla. I've never done Tesla before. All right, here we go, guys. Tesla is currently sitting at $361.39. Over the course of the day, it's down 5.42%. Hold on a second. Yeah. Over the last 5 days, it's down 1.45%. Over the past month, it's down 10.59%. Over the past 6 months, it's down 17.3%. Year to date, it's down 19.82%. Over the past year, it's up 27.53%. Over the past 5 years, it's up 63.47%. And on a maximum chart going back to July 2nd, 2010, Tesla's up 28,071.09%. Tesla's interesting. Very interesting stuff. So here we go. They got a PE ratio of 335.31. Okay. They got a 52-week high of $498.83, a 52-week low of $214.25, with an EPS of $1.08. They got 3.75 billion shares outstanding and 135,000 employees. I'm recording this on April 2nd, 2026. So take that into consideration. All right. No, we'll do this. Tesla declined following a first quarter delivery miss that overshadowed year-over-year growth. Analysts project cautious near-term performance as the company pivots resources from legacy models toward the April 2026 Cybercab production ramp and AI ventures, with sentiment suggesting a neutral hold consensus as markets await the full April 21 earnings report. Okay. The bullish view. Autonomous pivot and Cybercab launch. CEO Elon Musk reaffirmed that Cybercab production is scheduled to begin in April 2026. Analysts view this as a critical catalyst for shifting Tesla from a traditional automaker to an AI-driven mobility titan, potentially unlocking high-margin recurring revenue through unsupervised full self-driving subscriptions and robotaxi commissions. Expansion of affordable vehicle lineup. Tesla has introduced lower-priced standard variants of the Model 3 and Model Y approximately $5,000 below previous base models to attract cost-conscious buyers. Additionally, a new $59,000 dual-motor Cybertruck trim was recently unveiled, aimed at broadening the appeal of the stainless steel pickup to a wider consumer base. Energy segment growth potential. Despite a sequential decline in storage deployments to 8.8 gigawatts in Q1 2026, the energy business remains a key structural advantage. Long-term projections highlight the Megapack 3 and the doubling of Houston Megafactory capacity as drivers for high-margin floor growth that offsets automotive volatility. This is the bearish view now. Delivery miss and demand concerns. Tesla delivered approximately 358,023 vehicles in Q1 2026, missing the analyst consensus of roughly 365,645. This represents a sharp 13% sequential drop from Q4 2025, signaling that global EV demand remains under pressure and inventory levels are rising faster than deliveries. Margin pressure and valuation risks. The shift towards lower-priced vehicle variants and potential price war with Chinese competitors continue to threaten automotive gross margins. With a trailing PE ratio exceeding 340, critics argue the valuation requires perfection and leaves little room for execution errors in the upcoming Cybercab ramp. Regulatory and execution overhang. Tesla's autonomous ambitions face intense regulatory scrutiny from the NHTSA. Analysts warn that any failure to secure road exemptions for the steering wheel free cab or delays in Cybercab or delays in mass production could lead to significant downward revisions in price targets and investor sentiment. Alright, that's very interesting. So, they're trying to get the Cybercab stuff going. Let's see the earnings. Tesla's always got all these different things going, all these promises to be be fulfilled, and it's cool when they start to come to fruition. It's very interesting, but it's it's a bumpy ride. Do you trust in Elon or don't you? Okay, so this is all the same stuff we just read. Let's go and look at the earnings. So they last reported on January 28th, 2026. The normalized EPS. Sorry. They beat EPS by 10.96%. They were supposed to get 45 cents. They got 50 cents. Revenue estimate, they beat on revenue by 0.49%. They were supposed to get 24.78 billion. They got 24.9 billion. All right. They beat. Let's go down and see when the last time that they missed was. There's one. There's a few. Okay. So, just looking right here, last time is Q3 2025. They missed EPS by 10.53%. Then they missed in Q2 2025 by 0.97%. They missed in this is 4 in a row that they missed. So just looking at their blatant numbers and stuff, you're not going to be, you're not going to be impressed, I guess you could say. They miss pretty often. You know what I mean? They missed on revenue here in Q1 2025, 9.34%. Then they go back to Q4 2024. They missed. Then you go back to Q3 2024. They hit in Q2. Then they go back to Q1 2024. They miss again on both. both. So, you know, that's not what you're in the Tesla for. You're in for like the future idea of it. You know what I mean? I guess you could say. So, let's read an article about them. Alright. This is just the last one. Let's see if they let us read it. This is just the newest one that popped out. Whoa. We got ads, we got videos, we got everything. We got everything here, guys. Alright. Tesla sales rise after brutal year of Musk boycotts, but still fall short of expectations. By the Associated Press earlier today, April 2nd, 2026. New York AP sales of Tesla vehicles rose in the past 3 months after a brutal year of boycotts over Elon Musk's politics, but still fell short of expectations. The company reported Thursday that sales rose 6% to 358,023 in the 3 months through March. The first time in 3 years it posted a first quarter increase from the year earlier period. The increase follows a year of plunging sales due to an aging lineup and boycotts over Musk's right-wing political stands. Still, the results disappointed investors who sold heavily on Thursday. One reason was that sales were 6% lower than the 381,000 that financial analysts had expected, according to a survey by researcher FactSet, and they were sharply off from the sales for the 3 months ended in December. Tesla has to contend with lower demand due to the September expiration of a $7,500 tax credit for EV buyers, a blow to sales across the industry. Okay, so their $7,500 tax credit expired. The company is hoping cheaper versions of Tesla Models X and 3 introduced late last year will eventually lift sales. Tesla is also now producing a self-driving Cybercab with no steering wheel to attract customers. Details on the new offerings could come out on April 22nd when Tesla reports quarterly earnings. Financial analysts expect the company will report net income roughly doubled to 25 cents a share on $23 billion in revenue, according to FactSet. The heavy selling Thursday pushed Tesla stock down 5.4% to $360.59 a share. Still, the stock is trading 30% higher than a year ago, and its valuation is sky high too. 181 times expected earnings versus 22 times for the broad market. That reflects a marketing victory of sorts for Musk, who has been telling investors to focus less on car sales and more on the company's chances of dominating a future in which fewer people own cars. Self-driving Tesla robo-taxis are nearly everywhere, and Tesla's Optimus robots are taking over for humans in factories and homes. Before the future comes, if it does, European and Chinese EV makers are stealing market share. Chinese maker BYD recently reported it had made 2.26 million electric vehicles last year versus Tesla's 1.64 million to become the new record holder. That's it. All right. Let's ask this. Besides car sales, how does Tesla make money? So, I think this is important to think about when you're talking about Tesla. Just to be clear, I don't own Tesla, and I really kind of don't like Tesla as a stock. I will trade it sometimes, but it's not like, I don't know. I don't like it that much, if I'm being totally honest. It's just that the numbers are not good. Can't do it. Sorry. While selling electric vehicles remains, here we go. While selling electric vehicles remains Tesla's primary engine, the company has aggressively diversified into energy, software, and infrastructure. As of 2026, these non-auto segments are growing significantly faster than car sales. Here is a breakdown of how Tesla makes money besides selling cars. Energy generation and storage. This is currently Tesla's fastest growing business unit. It focuses on capturing and storing electricity for homes, businesses, and the electrical grid. Megapack and Megablock, massive battery systems sold to utility companies to stabilize the grid and store renewable energy. The Megablock is a newer, high-density unit designed to replace fossil fuel power plants. Powerwall. Residential batteries that allow homeowners to store solar energy and provide backup power during outages. Solar roof and panels. Integrated solar technology for residential and commercial buildings. Two, software and subscriptions. Tesla is increasingly becoming a software company, creating high-margin recurring revenue. Full self-driving FSD, Tesla recently surpassed 1.1 million active FSD subscriptions. While they previously sold a perpetual license, the shift toward a monthly subscription model, currently around $99 a month, provides a steady, predictable income stream. Premium connectivity, a monthly subscription for in-car internet, live maps, and video streaming. Acceleration boost, one-time software purchase that unlock higher performance in existing vehicles. I ain't gonna lie. That would make me mad. That's all makes me not want to own a Tesla. I'm sitting here hearing this. I'm like, bro, no. I want to go out here and crank on something in my engine and make it go faster. You know what I mean? Screw buying a freaking software update. What are you talking about? As the fleet of Tesla, here we go, services and infrastructure. As the fleet of Tesla vehicles on the road grows, so does the revenue from maintaining and supporting them. As the fleet of Tesla vehicles on the road grows, so does the revenue from maintaining and supporting them. Supercharging network. Tesla has opened much of its network to non-Tesla EVs using the NACS standard, turning its charging stations into a global fueling utility. Interesting. Service centers and parts. Revenue from out-of-warranty repairs, body shops, and official Tesla parts. Insurance. Tesla uses real-time driving data to offer insurance directly to owners in several U.S. states and international markets. They just got a little hand in everything, don't they? Okay, so this is something a buddy told me about that I thought was very interesting. The regulatory credits. Tesla earns green credits because it only produces zero-emission vehicles. Other automakers that fail to meet government emission standards must buy these credits to avoid heavy fines. This is essentially 100% profit for Tesla, as it costs them nothing to generate these credits beyond their normal production. Emerging AI and robotics. While still in the early stages of commercialization, Tesla has begun to monetize its AI investments. Optimus, humanoid robot, initial industrial sales and internal deployments have begun, aiming to automate labor-intensive factory tasks. AI as a service. Tesla is Tesla. Jesus. Tesla is positioning its Dojo supercomputer and AI and Cortex AI clusters to potentially license its AI training power, or FSD software, to other manufacturers. Okay. So their automotive sales are about $69.5 billion. Their services and other are about $12.5 billion. Their energy generation and storage are about $12.7 billion. By the end of 2025, non-automotive segments accounted for over 25% of Tesla's total revenue, a share that continues to rise as the company pivots toward becoming a physical AI and energy infrastructure giant. Okay. So that's Tesla for you. You know, do you think that there's going to be Optimus robots in every factory? Do you think that there's going to be no steering wheel taxis running around on the streets every other car? If so, then you might want to buy a Tesla as a stock and invest. If not, then maybe not. I mean, their numbers are pretty awful, but you know, Elon Musk, this guy, he's pretty unstoppable force. I don't know. Let me know what you think in the comments. That's enough. That's enough of that. Let's move on. Let's look at something else. Let's look at. So that'll be good. I'll edit that down. That should work pretty well. Let's look at. Let's look at this. The cryptos. Suck a toe in the crypto. Here we go. All right, here we go. So we got Bitcoin sitting at $66,922.99 right now. Shoo doggy. It is down 1.59% in the last 24 hours. Ethereum's at $2,054.92. It's down 3.83% in the last 24 hours. Tether, almost to the dollar, 0.9998, up 0.01% in the last 24 hours. XRP is at 131. It's down 2.36% in the last 24 hours. BNB, I don't know much about that one. It's at $583.31. It's down 4.42% in the last 24 hours. Fair and Greed sitting over here in the orange. Nothing really catching my eye here. Nothing really catching my eye here. It's 7:34 p.m., guys, April 2nd, 2026. Just for some context, let's look at Polymarket. Okay. Who do we think wins the NCAA final tournament? NCAA tournament. Is it going to be, what is this, the Final Four? We've got Michigan, Arizona, Illinois, or Connecticut. Who do you got, guys? I haven't watched college basketball in a few years, so I have no idea. I have no idea. Okay, here's some interesting ones. Here we go. Gavin Newsom. Who will be the Democratic presidential nominee? Gavin Newsom or Betty Alexandria? We got Gavin Newsom or Alexandria Ocasio-Cortez. Gavin Newsom's currently sitting at 25%. Alexandria Ocasio-Cortez is sitting at 8%. Who will be the Republican presidential nominee? We got J.D. Vance sitting at 37%, and Marco Rubio sitting at 21%. Okay. Interesting. Will the U.S. and Iran ceasefire by December 31st or June 30th? I would probably bet. Oh, that's a good one. That is a good one. I am a betting man. I don't know, man. Oh, God. That's a good one. Now I'm fired up, all right? Hungary parliamentary election winner. Let's bet on that. Will it be Tazar or Fidesz KDNP? I don't even know what that is. Good grief. Okay. How many tweets will Elon have in April 3rd, 2026? By April 3rd. Between March 27th and April 3rd. Alright, we got some fun ones here. Okay. Will the Fed's decision in April be no change or plus 25 BPS? Will he raise it? Will he raise it? Oh, if he raised it, that'd be wild, wouldn't it? Who will Trump talk to in March? March is over, so, you know. The next Prime Minister of Hungary. The next French presidential election. Oh, man. I might do a fun stream over the weekend and just kind of mess around with a bunch of Polymarket. Dive deeper into some of them. Okay. Okay, here's one. Will Netanyahu be out by June 30th or December 31st? I don't think either one of those. I think that boy, he's got an iron grip. He's not letting it go. The Iran-Israel conflict ends by December 31st or June 30th. Oh, nah, bro. I bet that ain't going to end anytime soon. Now we've got a different lady and a 2% chance for Judy Shelton to be confirmed as Fed chair. Look at that. Kevin Warsh is 97%, but Judy Shelton sitting at 2%. Very interesting. Very fun. Very interesting, very fun. Alright. So we covered Tesla. Now we've got... Hey. All these ads. Costco is up 1.85%. CME Group is up 2.75%. I'll find something that catches my eye a little bit here. Netflix. It's below $100. Oh, where are we going? Here we go. Netflix is sitting at $98.66. Nope, $98. 1 second here. I just want to just make sure everything I'm super accurate here, as accurate as I can be. It'll take me just a couple seconds if I can do it. All right, guys, here we go. Netflix is currently sitting at $98.28. It's up 3.25% today. Over the past 5 days, it's up 6.59%. Over the past month, it's up 1.62%. Over the past 6 months, it's down 15.13%. Year to date, it is up 5.23%. On a 1-year chart, it's up 5.46%. On a 5-year chart, it's up 82.91%. On a maximum chart going back to September 13th, 2002, it's up 82,116.67%. Netflix. So Netflix is right at that, right under $100. That $100 threshold is probably going to be, you know, what do you call it? Like a psychological breakthrough, I guess you could say. Like when people get past that $100 mark, it'll probably go up a little over time. That's just how it usually kind of goes. That's usually how it goes. They got a PE ratio of 39.03. They got a 52-week high of $134.12, a 52-week low of $75.01, with an EPS of $2.53, 4.22 billion shares outstanding, and 16,000 employees. All right. Let's look at their earnings. Okay. So they got their next call coming up in 14 days. And they're estimated to get 0.77 cents. Alright, so let's do this. Let's look at the overview. Netflix climbed over 20% from February lows, outperforming the S&P 500 in 2026. This recovery followed its exit from the Warner Brothers Discovery acquisition and recent broad subscription price hikes. Analysts project 12 to 14% revenue growth for the next quarter, supported by a rapidly scaling advertising tier and live event strategy. Just kind of a personal tidbit. I know there's a UFC fight coming up, and Netflix has an event that same night, and their event is like a stronger card than the UFC fight that night. Now that's kind of a one-off thing, but that'll be like substantial as far as like, I don't know, like their ability to do that going forward, I guess you could say. Very interesting stuff. So bullish view. Strong ad revenue and margin expansion. Ad revenue is projected to double to approximately $3 billion in 2026, contributing roughly 6% of total revenue. Management's 31.5% operating margin target for 2026 reflects increased cost efficiency and monetization of the ad-supported tier, which has seen robust scaling and AI-driven ad tech integration. Aggressive pricing power and capital discipline. Netflix implemented price increases across all tiers in late March 2026, with premium plans reaching about $26.99 a month. This strategy, combined with walking away from the Warner Brothers Discovery deal and resuming its multi-billion-dollar buyback program, demonstrates high pricing power and a focus on shareholder value. Man. Live content and strategic diversification. Success in live events, such as the record-breaking World Baseball Classic, viewership in Japan validates a push into sports and diverse media like video, podcasts, and gaming. These initiatives aim to solve the subscriber plateau and provide high margin growth independent of core subscriber ads. Increased content spending pressures. Management flagged a 10% increase in content spending for 2026 to approximately $19 billion. This surge, aimed at fueling new formats and original series, could pressure margins in the short term, particularly as revenue growth is forecast to decelerate from 2025 levels. Significant insider selling activity. Director Reed Hastings sold approximately $40.1 million in common stock on April 1st, 2026, while institutional inflows remain strong. Heavy executive selling at current price levels captures a core tension in the investment case and may signal a perceived valuation ceiling among leadership. Soft Q1 guidance and deceleration concerns. First quarter 2026 guidance was softer than consensus estimates, with EPS projected at 0.76 76 cents versus an expected 81 cents. Analysts remain cautious as full-year revenue growth is forecast to slow to the 12 to 14% range, down from 16% in 2025 amid high competition and market saturation. I mean, yeah. I don't think we need to go any further than that on Netflix. What do you guys think about Netflix? I think as a stock, it's probably gonna continue to rise over the. Let's see where we're at. Yeah, I think it'll probably continue to rise. At least, modestly. But I don't know. As far as an actual business model goes, I don't know. I don't know. I don't think so. But it's all about the money. So, let me know what you think. Let me know what you think. Let's do something else. So crude oil is sitting at $112.06, up 0.47% today. Henry Hub natural gas up 0.25% today. Gold is at 4,702.7. It's up 0.49% today. Now here's where what it's all really about. The 10-year treasury yield. How is the 10-year Treasury note connected to the stock market? All right, here we go. It is a common misconception that the 10-year Treasury yield and the stock market are perfectly glued together. While they often move in opposition, they are independent instruments driven by different forces. The 10-year Treasury note represents a guaranteed return backed by the U.S. government, whereas a stock represents equity, ownership in a company with no guarantee of return. Here is how and why they can remain disconnected. Different fuel for movement. The stock market and the bond market, where treasuries live, respond to different signals. Stocks follow earnings. If a company reports massive profits, its stock will likely rise regardless of what interest rates are doing. Treasuries follow inflation and Fed policy. The 10-year yield is primarily a reflection of where investors think inflation and the Federal Reserve's terminal rate will be in the future. The safe haven decoupling. During times of extreme global crisis, like a geopolitical conflict, both the stock market and treasury yields can drop simultaneously. The logic: investors panic and sell stocks, prices go down. They rush to buy treasuries for safety. Because bond prices and yields move in opposite directions, the high demand for bonds drives the yield down. The result: stocks and yields move in the same direction, breaking the typical inverse relationship. Growth expectations versus cost of capital. Sometimes a rising 10-year yield is actually good for the stock market. If yields are rising because the economy is booming and overheating, investors may ignore the higher cost of borrowing, higher rates, because they expect corporate profits to grow even faster. In this scenario, the stock market climbs alongside the 10-year yield because the growth signal outweighs the interest rate signal. 4. Sector-specific independence. The stock market is not a monolith. While high treasury yields often hurt tech and growth stocks because their future cash flows are worth less today when discounted at a higher rate, they can actually help other sectors. Banks. Higher treasury yields often mean wider margins for banks, allowing them to charge more for loans. Energy commodities. These often thrive in high inflation environments where yields are also rising. The equity risk premium gap. Investors look at the equity risk premium gap, the extra return they get for picking a risky stock over a risk-free 10-year treasury. If the 10-year yield is at 4% and the stock market is expected to return 8%, the 4% premium might be enough to keep investors in stocks. The market only connects violently when the treasury yield rises so high that the premium for owning stocks no longer feels worth the risk. Until that breaking point is hit, the two can drift apart. So with strong GDP growth, this rises inflation fears, rises higher profits in the stock market, is a positive correlation. Recession fears, the 10-year, they flight to safety. Impact on stocks, they fall with recession fears as well. So they both go together. Positive correlation. Aggressive Fed hikes rises. The impact on the 10-year yield will rise. The impact on stocks, they will fall with Fed hikes. That's an inverse correlation. That kind of helped a little. That kind of helped a little bit. Alright, it's 8:01. It's time for me to go. Good job, guys. We did it. We did it again. You know, just some personal fun stuff for me. As I continue to do this, I'm sticking with my stocks. I'm, you know, trying to get my money going, trying to get more income than expenses, trying to pay off my debts. Yeah, good stuff. This whole, you know, trying to get in here and stream. I'm gonna try to get it out, you know, a couple videos a week. I'm not gonna put so much emphasis on what day I'm doing it. It doesn't really matter that much. Just put out a couple videos a week. I think we're gonna have it. I tried to cheat the system and find like a little loophole to post shorts and get my views up and shit like that. Didn't work. Just gotta keep sticking with it. Do it the regular old way. Couple videos a week. We're moving right along. I think we got like 4 subscribers now. Hey, pretty good. Pretty good stuff. We're moving right along. Yeah, that's gonna be it, guys. That's gonna be it, dogs.